Well, thank you very much, Scott. What's
Hello.
happening, Steve? How's it going?
It's going good, thank you. And yeah, like Scott said, the webinar is going to be recorded, so if you miss any of this, you can catch it later. But happy Monday to you.
Yeah, happy Monday to you as well, and happy Monday to everybody out there. Looks like we've got a pretty packed house. That's always encouraging to see. Lots of new people in the webinar, probably a good handful of people that participated in the test drive, which, correct me if I'm wrong, we just, well, we're still in process of the latest test drive and had record attendance on this one, which kind of makes sense with the influx of clients that we've had recently. So we're going to try to make a little bit of time at the end of the webinar here for some additional Q&A questions and answers for the new people that have onboarded via the test drive. So welcome everyone. Today's the 29th. A couple more days in January we'll be in the history books of 2018. So feels like we haven't done a proper office hours in quite a long time with the holidays and the test drive and all that good stuff. So welcome everyone. Before we get into the good stuff here, just want to take a moment to make sure the lawyers don't have a heart attack here. I just want to make sure everybody is aware of the fact that all the cool and interesting information that we share with you in these webinars is for educational purposes only. So if you do need somebody to tell you when to buy and sell, what to buy and sell, give you financial advice, please seek out a registered investment advisor or some other licensed individual in the securities world to help you out with that type of business. All right, I think that's good enough.
hmm
So Steve, before we get
Yes.
into, what we have going on with our scanner, which is, in a class all in its own. Not really can't really call it the best in class. It's kind of the only one in its class. But not only do we have this
Best and only.
groundbreaking technology and the first AI available to the retail trading public, but we've built quite the community around that technology. And I think everybody that's been part of that community knows exactly what I'm talking about, how important that is, a community of users and a community of support. So it all kind of starts with Barry's Trading Room. Great thing about Barry's Trading Room, Barry moderates it, longtime trader, longtime user of TI technology, keeping in tradition of, trade ideas was developed for traders by traders. So we try to keep people in the know, teaching you like myself, Steve, Andy, Sean, and then Barry, who moderates the free trading room. And yes, I did say free. You don't even have to be a Trade Idea subscriber to get in there. So if you
Free is a
haven't been
good
taking,
price.
it's great, especially, when you look at maybe competing chat rooms out there and the fees that they charge, and to have one with a guy like Barry for free. Uh, if you haven't checked it out, do yourself a favor and get in there. Lots of good information and a growing crowd, pushing 500-600 people a day in there. Of course, today is Monday. It's myself and Steve as always. We changed it up a little bit with Steve taking the helm tomorrow, getting into the trade of the week. Andy rides shotgun with him. And then in the middle of the week, we really like to change it up. We bring in Dan and Brad. Dan's the founder of TI. Brad is the Chief Resident Technical Officer. So always good to hear what they have to say. Andy kind of rounds out the 1 hour trading studios on Thursday, and I ride shotgun with him. Then on Friday, we change it up. Got what we call a little 3 hour marathon from 11 a.m. to 2 p.m. Eastern. So it's anything trade ideas related. Well, I say anything, it's almost anything. We haven't been really getting into the Brokerage Plus. We probably will start covering that more when it comes out of beta, which they tell me is going to be relatively soon. Of course, soon is a relative term. We'll keep our fingers crossed by the end of the first quarter. All right, so that's what we have going on during the week, ladies and gentlemen. Monday through Thursday, the 1 hour webinars, and then Friday with the 3 hour webinar. So, Steve, we've come to the point in time where we take a peek at the itinerary today, and of course, it's typically the time when I pass it over to you and talk about the technical aspects of the market. So, if you're ready, I will
Sure.
pass it along here. 1 second.
I'm running deep. Hit me. Throw it deep.
And here it comes. Hail Mary.
Cool. It's funny. Actually, I'm going to take a bit of a detour before I go into there's my desktop, there's my screen. We were just making football analogies. And as many of you know, Trade Ideas has an artificial intelligence product that uses machine learning to try and find probable outcomes. And a lot of times I have a slide in my webinar that says man and machine are stronger than a man without a machine, or a machine by itself, something along those lines. And I saw a great commercial over the weekend from Amazon Web Services and how they're now allowing the NFL to RF micro ID chip every player. And what that does is it creates a giant pool of data. And where I'm going with this is one of the reasons, I mean, I'm not a huge fan of New England, but one of the reasons I think New England football team has been so successful in the second half of the last 2 seasons, including last year's Super Bowl, I think those guys are dialing in some machine learning and some artificial intelligence in a very big way. I mean, New England has always been on the forefront of trying to get an edge technology. But don't be surprised if you start hearing more about how the coaching in the NFL going forward are using artificial intelligence and machine learning at halftime. I mean, as far as I'm concerned, when I watch these New England games, that's basically just New England gathering data on their opponent so they can go in at halftime and figure out how to close the game out. So anyway, I didn't want to lose that thought. I thought that was an interesting kind of a parallel as to what we're doing here, which Jamie will talk more about, man and machine, using machine learning to sift down and give the human being a short list of ideas that are probable. All right, so, excuse me, yes, thank you, Mike C. You notice we do have some moving averages on our charts now. So if you don't have the new beta version of the charts, might want to go download it. We're slowly dialing in some indicators. So a couple of observations from the market action today, coming back from a weekend. I'm going to zoom in here real quick, and this is the SPY, and what you've got here is what we call an inside day. I'll just mark that up for you. The high of today was inside the high of yesterday. The low of today was inside the low of yesterday. That's called an inside day. There's not really much we can glean from that. If we had had an outside day where the red candle was twice as wide and enveloping the green candle, that's a bit more bearish. But an inside day is just kind of a day of rest, and no real red flags in terms of price action on that candle. But inside days can just can be considered just kind of part and parcel of maybe another flag pattern, another sideways pattern, consolidation pattern, you know, waiting for its moment to move higher. So no real harm or foul done today in the S&P. Same with the diamonds. Once again, believe it or not, that is an inside day by just a dime or so. So we did not take out the high of yesterday, Friday, or the low of Friday with today's action. And then lastly, the Qs is a really easy to spot inside day, kind of a little spinning top inside. So no real caution flags in terms of reversal candles. You know, the path of least resistance continues to remain up. One of the things I mentioned in the webinars last week is there's an old trader's axiom that says the market can remain overbought longer than you can remain solvent. So if people get hung up on RSI and stochastic indicators and Bollinger Bands, and they're looking at this market that's just the most overbought of all markets that I've seen in quite some time, the pullbacks that people want, they really aren't coming. You know, Sean today in our back channel, you know, joked about buy the pullback. I said, what pullback? We're just an inside day, but you can see how the traders are just conditioned to buy any sort of combination of red candles midday. Now, that'd be great to say if it was the same for the IWM, but it wasn't. The IWM did not have an inside day. It actually had a bit of an outside day. Not quite sure what to make of that, but you know, again, using our trend lines and our moving averages, the price action is still above the fast line, which I call it the 10-period moving average. The QQQ, by the way, is the NASDAQ ETF for somebody that just popped a question in there. The IWM, respectively, is the Russell 2000. So those are the 4 ETFs I always like to try and keep an eye on. And again, what we got is an inside day in the SPYs, S&P. We got an inside day in the Dow and the diamonds. And we got an inside day in the NASDAQ and the QQQ. But we did not have an inside day in the IWM, but really not seeing a whole lot of caution flags or any need for any type of worry. However, there was one thing that I did see that was very interesting today. So, you know, just put the Dow back up or even the spiders or whatever. Look at that, you know, daily, again, inside day, big green candle on Friday, probably working some of that off. But for those of you that are familiar with options put buying as a insurance hedge, you've heard it called the VIX, the volatility index. Well, there's an ETF for that. Take a look at what happened over there today. We had an explosion off of lows and a giant green candle up 7% closing on highs. This is very unusual. Usually when we see these types of spikes back here in the history, this corresponds to days when the market was really selling off and then the buyers stepped back in and pushed the VIX lower. But what we had today was no real threat of candles showing anything dastardly, but putting up inside days across the board, but a little bit of bifurcation in the indicators that were given. A lot of people were buying protection today, a lot of insurance buying protection for the longs that want to hedge their bets, and they basically do that using the volatility index, the options put volume, which is sometimes referred to as the fear index. So I mean, again, I'm going to cycle through. There's the Dow, pretty tight. You know, the Q's really tight with a spinning top. The Dow, I'm sorry, this S&P pretty tight. But typically on the inverse is what we have in the VIX. However, today, one last look, a big explosion off the bottoming there with the VIX, and also a lot of volume recently in the last few days. So this is something interesting, and it's not a major red flag, but it's something that I definitely took note of today. And we'll see if it follows through tomorrow. If we get some weakness tomorrow and some big red candles and a pullback tomorrow, it's an interesting of note to take a look at what happened today, as maybe a lot of early warning people decided to buy some insurance using the VIX.
Yeah, and Steve, go ahead and compress your chart just to give everyone an idea of where the VIX used to be and where it is now.
It's difficult to look at that because it's a rolling ETF and it has to reset, and there's contango in there and all sorts of other terms. Technically, it just bleeds without much movement, but when we do get fear and pullbacks and selling in the market, this thing will explode, just pop off the table. But interestingly enough, that candle looks nothing like the candle I would have expected off of just a simple inside day today in the general markets. I mean, guys, we are due for a pullback. I don't know when it's coming, but we really could use a pullback because we are so overbought. But again, what I said on the early onset, you can't base your decisions on whether we're overbought or oversold, because the market can remain overbought or oversold longer than you can remain sane and solvent. All right. The blue ETF, real quickly before I give it back to Jamie, I'm using SMAs on my daily chart only. No simple moving averages, no moving averages on my 15-minute chart intraday, but I like to keep it simple. I just like volume. I like a 50, a 20, and a 10. And when they're all stacked up like this, 10 above the 20 and the 20 above the 50, it's about as healthy of a market as you can see. So great bill of health for the way the market's trending and holding its moving averages, but it definitely is overbought. Just a matter of when will that correction, that needed correction, come and give this market a much needed shower.
Good stuff, Steve. Good stuff. And your comments, your football comments. I mean, it sounds like, we had Moneyball for baseball. Now it seems like, football is taking a cue.
Just to elaborate on that, I think it's only been available since November, but it's through Amazon Web Services, and they put an RFID microchip on every player. So now you can see what the 6 guys on the front line are doing, who's pulling, who's blocking down, who's releasing and going out. And then they can drop all that data into, how they defended it, and the machine can come back and give them a great second half game plan. And I'm convinced that even before Amazon Web Services was offering this, that New England had found a way to tap into machine learning, and that's why they come back so well in the second half. And that's just my opinion.
Eventually you won't even need coaches, right? You just have the AI.
No, they still need to call the play, but the AI is going to give them suggested, scheme A, B, or C, and the coach still has to figure out which one he wants to use. Much like when you get to our Hollies shows us some scans that not all of them are taken. Some are and some aren't. It's the man and the machine coming together.
Absolutely. So let me flip it back over here and we will proceed. Okay.
There you go.
Let me know when you got eyes on. Okay, everything good. And Mike, I made a special adjustment for you, so hopefully your screen's not black. So there you have it. Okay, now expectations. Expectations are huge. Expectations typically aren't what you hear a lot of people talking about when they're talking about trading strategies or certain setups and all of these things, but expectations are very important. Today was a classic example of, well, we kind of sold, well, we ran up at the beginning, and let me just go ahead and get a chart of SPY up here. All right, so here we are looking at the 5-minute candle. Obviously, I've got my daily over here too. I've got way too many lines. I need to do a little house cleaning there. But looking at the 5-minute candlestick chart of the SPY here. Okay, we got 5 minutes, 10 minutes, 15 minutes. Up here, the blue arrow, you notice I have CC readings. Well, some of you are going to know what that means, but there may be some of you out there that go, what in the world are CC readings? Well, we've got these windows called compare count windows, and every morning I look at what these windows are telling me in the first 15 minutes, and that helps temper my expectations of what might happen for the rest of the day. So, took a screenshot this morning, and I always tweet these out right at 15 minutes into the open. These are looking at large cap stocks, 4 billion and above, 5.4 billion and above. I've got some smaller stuff over here, but I really pay a lot of attention to these guys. And of course, they were all pretty similar across the board today, and even the smaller caps even had a bit more selling pressure to them. But what these windows are telling me, I'm looking at any stock hitting a high or a low in the first 15 minutes, but that is doing exceptionally high volume for that specific time period. So this morning, we had these readings after the first 15 minutes. 58% to the downside, 59%. We get one more percentage point when we're looking at the any company capitalized above 5.4 billion. So anytime we see a bias above 50%, well, that starts to mean something. Obviously, the higher above 50%, or as we saw this morning, 59% versus 41 and 58 versus 42. When we really get over 55, it starts meaning a lot more, all right? Above 55, 56, 57, a lot of the times, of course, it's only been to the upside here lately because of the type of market we're in. A lot of the times when we have these big up days, we'll see in excess of 60% to the green side. But what was interesting this morning is look at the market action for the first 15 minutes, 5, 10, 15, literally the top of the range for the day. And of course, after 15 minutes, I look at my CC windows and I see, there's a lot more selling going on in the opening 15 minutes. And what I choose to do, since this volume is so high, my theory is that we're getting a little peek into what the institutions are doing, because they get a lot of that selling done in the opening 5, 10, 15 minutes. They get large blocks of it done, but they can't get it all done.
Almost like they're testing the waters, right, to see how it reacts.
But what they're doing is they're leaving footprints, digital footprints, that can sometimes give us a nice correlation. Now, on a couple of days ago, I can't remember if it was Friday or Thursday. Let's just see here. Let's just scroll back on the chart. Okay, this was Thursday, right? Now, when the market goes big one way or the other in the first 15, 20 minutes, a lot of the times these can be skewed, right? So on this day, we had a lot of downside push, and of course, these windows are showing downside push as well, but we ended up snapping back. Where I found these to be the most interesting is when we have an opposite effect. So today, what do we have? We had the SPY just creeping up. Of course, we had a little bit of a gap down, and we tried to come back up here. But at the end of 15 minutes, I'm seeing these levels, which tell me, okay, we've got diversion here. So the overall market is gyrating up, but when I pull up the carpet, I see a lot more what I perceive to be institutional selling in the first 15 minutes. So that helps me temper my expectations, all right? If we get up here and we start pushing through on these previous highs with volume, well then, these might not mean as much, but it's pretty uncanny when we see a opposite move up, big red readings here, and then as soon as those readings came out, we started gyrating down. Now, keep that in mind as you move forward, and I'll drop these windows in before we're done today so that people that want to start observing them can do so. So just keep in mind, you can get the best reads when we have an inverse market versus what we're seeing here, or if the market is relatively flat. Anytime we go up too much and see big green, or down too much in the opening 15 minutes and see big red, that can kind of skew things. So just keep that in mind as you move forward. But a nice expectation was laid out. Now, on the same token, don't want to get too far ahead of myself here, but we had Holly showing up with a pretty mixed bag, because typically, we were almost at 50-50 here, not quite. We had 8 strategies, 1, 2, 3, 4, 5, 6, 7, 8, and 3 of those were short. So we were just one away from 50-50, which isn't very typical, as any longtime watcher of Holly can tell you. So seeing more strategies of the short nature show up for today's trading was also, had me going, okay, well, it's going to be an interesting open. It's going to be interesting compare count. And then, of course, we get the readings at the top and the gyration down. So between Holly and the compare counts, what was I telling myself today? Well, we've got a nice up move to start the day, but those compare counts, what's going on underneath the rug, are giving me conflicting information. So watch, wait, see what transpires. So we get the down move. Then we see Holly, and if we look either at risk off today or risk on today, the chart pretty much is the same, just a little bit severe, a little bit more severe over here than we have here. Holly was struggling for the first part of the day, popped off a couple of longs. We can see here, 16 minutes in, about 20 minutes in, MZOR and ANFI. They got positive for a little bit, but it didn't last long. All right, so now we're seeing the long as the Holly spitting out, getting very little traction. I think ANFI might have got up a couple of pennies, but never could get above that line there and stay. And then we had MZOR get a nice little pop up, but then, of course, the gravity of the market tends to take it as well. So we're getting, I'm getting all this information from my compare count windows, the complement that Holly steps up to the plate with, and then we see her struggling in the first couple of hours here, all right, never being able to get green. So let's take a peek at another top list that I had today, because once again, as the day was progressing, kept looking at my major indices here and kept telling myself, or looking and verifying, hey, are we still inside? And of course, we stayed inside, as Steve illustrated, on all the major indices. And these days are notorious for, little wishy-washy back and forth. We got tugs to the downside today. And of course, all the buy the dip people, first it was here, then we took another little leg down. We're still staying inside. We come back up here. People are thinking, hey, buy the dip. It's working again. And it did work until we turned and set new lows towards the end of the session. So no matter how you slice or dice it today, a difficult day, that's typically what an inside day is. But just like any other day out there, there were some good trades to be had, a couple of good long trades, a couple of good short trades, but they're just not as, not as many as we have when we're really ripping up, setting new highs, or taking a nice pullback, which as of late, there's just not a lot of that action in the cards. But as Steve said, huge energy expenditure to get up to these levels. Are we going to have a little test down to here tomorrow? Are we going to build a base camp sideways for a while? Not really any way to tell. We just have to wait and see.
Keep an eye on that VIX, that'll help.
Exactly, and as Steve said, what the VIX is doing is, not, oops, I think I just typed that into the wrong field, but there we go. Seeing the VIX do this and really get above these levels here, what do we make out of it? Typically, as soon as we get a little volatility push here, you see all the short guys jump in and slam it back down. We'll see what happens tomorrow. Now, the other top list then also, told me that, it's just kind of, yeah, there's going to be long trades, there's going to be short trades, not really any concrete direction. This list right here, my pack leaders list. Well, what does pack leaders mean? Well, these are all big cap stocks, and they have to be hitting all-time highs, okay? with a market cap of 4 billion or higher. Now, usually on a down day, this list isn't going to be near as packed, but it pretty much stayed packed all day, maybe even a little bit fuller. So while we're seeing a down move in the market and it's an inside day, what this is telling me is, well, for a down day, there sure are a ton of stocks, big stocks, popping all-time highs. So there was actually some kind of sneaky buying going on from the institutions today. It's not uncommon to see this, all right? When there's a perception of selling in the market, which there clearly was today, and you can bet your bottom dollar there were more stocks going down than up today. But very curious, because on a lot of the stocks doing a lot of high volume with the stocks on the pack leaders list. All right. So what does that mean for tomorrow? I don't know. We'll see. Gun to my head, we might have more up movement tomorrow, but there's no point in making a prediction here. And whether I make a prediction or not is really meaningless, because as traders, we can't just come into each and every session with preconceived notions. That's kind of a bad habit to get into. We have to react according to what is unfolding each and every day. All right, so let's talk about Holly and some of the trades that she generated today. Now, it's no big surprise to see that pretty much the biggest winner, risk off, not the biggest winner on risk off. We had a long that took that crown today, 48 cents on HQY. But as far as risk on, and the thing that moved the most today, no big surprise to see that it was a short play. So, when we look at Holly's P&L, risk on 76, risk off 50. We got 41 of the 50 here and 61 of the 76, all in this one trade. Relatively light trading day for Holly today. 1, 2, 3, 4, 5, 6, 7 trades. And so for the market action, to see Holly only up 50 cents in risk off and 76 on risk off mode, no big surprise there either. And once again, Holly's relatively small trade blotter today also tells us that lots of strategies, but only 1, 2, 3, 4, 5 actually fired trades. These guys didn't fire any. So Holly only identifying that number of trades today too coincides with an inside day. So all these things kind of coalesce together to help us form our expectations. Of course, as these things unfold in real time, it's not easy at first, but over time with repetition, it becomes clearer. So when
Let
we
me
take
just
a
add, if I could, that there was no
Sure.
directional bias today. For those that watched Holly last week, it's pretty much long, all day long. So today we had a moment where the markets did go to lows. As they were at lows, we had two shorts fire off. And those shorts, one of them wound up working, one of them was basically a flat. But my point is, aside from a low trade count, which in itself is a tell, we also had bifurcated directional bias. The AI wasn't quite sure which direction to go today, so I wanted to point that out as well.
Yep, yep, very good. So check out the metrics that appear when I double click on Holly's plotter for INXN. All of her crucial information is mapped out over here for you. Entry price corresponds with the blue box and the blue line here, and the blue arrow here coinciding with the candle and specific time in which the trade was generated. Red box up here corresponding with the red line is the stop loss. And of course, we can see all of that information in some of these columns here, what every strategy as far as the hold time was designed around, what type of stop loss was it using here. We can see these are all smart stops, 35. Follow through here. Now, we've got two different values here to contend with. We've got Holly on risk off mode and Holly on risk on mode. Now, risk off, just to reiterate here, Is Holly obeying her rule set like each and every one of us should do every day? You got profit targets, you got a stop loss, you've got a timed hold. So we can see here the profit target or the stop loss did not trigger, and the timed exit came up, selling into strength. We can see right here, that's a 60-minute hold time. So the shaded area right here perfectly corresponds with this candle right here, which is when Holly exited the trade and took her 41 cents. Now risk off is just telling us, hey, this is marking it at the close. If you stayed in it for the entire day and got out right before the close, which would be this little area right here, you made 61 cents. Now, let's talk about risk off and risk on and how you get used to deciding, well, should I try to stay in? So let's use this trade as an example. We see Holly getting out right here. And I'll just go ahead and draw another line for easy reference. And this is best addressed, in my opinion, on a trade by trade basis. So we took the trade with Holly. Let's say we were in 200 shares. We get the nice move. We're happy because we're able to book a profit or have the opportunity to book a profit. And we see Holly closing the trade here. She's like, hey, my time's up. I'm closing the trade. This is what I'm programmed to do. So we're like, okay. So a good habit to get into is if you're in 200, go ahead and close out half of that with risk off Holly. Then we go about examining the chart and trying to figure out, well, I think this looks good. I'm going to try to stay in it and make a little bit more. So here we see Holly getting out, and then we see after she gets out, what does it do? It continues to go sideways for a little bit. Buyers and sellers are equal. And then what do? We get a release, boom. And all the way down here, probably a little bit more than 61 cents. So the goal is, if you do decide to go risk on either a half lot or maybe even the full trade once you get a little bit more proficient at it, we know very seldomly are we going to pick the bottom or on a long sell the top. Happens every once in a while, but it's pretty much by accident. But the goal is to try to capture something in between here. Extra dime, extra nickel, extra 15 cents, it adds up over time. So when we're seeing Holly peel out of here, if we felt compelled to do so, we could have kept 100 and set the stop loss for a break even. If that happens, you still made money on the first lot. If it doesn't stop you out, you can see in this case, you could have made, probably more to the tune of 70 cents on that second lot and captured some of that alpha in between risk off and risk on. All right, looks like Steve's doing a pretty good job of keeping those questions answered. If I do need to go into detail about something that anybody sees on the screen here, by all means, pop the question out there.
Yeah, what moving averages are you using there? Marguerite just chimed in.
Well, I've got, they seem to get messed up here. I thought I had a 50 and a 200 day over here on my daily, but the little thing doesn't seem to be showing up right now like it does. Well, now it's not showing up over here. You know what I'm talking about, Steve? Usually at the top here.
Yeah, what about your daily chart? Don't you have something on your daily chart?
Yeah, I do, but it usually tells you what the averages are up here. That's what I'm just pointing out, is that little field has disappeared magically. This is simply a 10 period moving average right here. As Steve was reiterating earlier on his longer term charts, when his moving averages are lining up, like he was showing you on the SPY, on the daily, it's a good sign. And of course, Steve, you are the one that pointed out to me the 10 period. And when a stock has a nice trend on the intraday, this is good news when it's hugging that line right there. And of course, you can see the decoupling later in the day. But from an intraday basis, if you're looking at a 10 period moving average and it's hugging that line, staying above, wicking down a little bit, but staying above, that's always a good sign that the momentum is definitely in play. All right, so we took a look at Holly's good winner on the short side today, but now we have to talk about this guy right here and other ways to read into Holly, because it's not all cut and dry. You learn more as you go along. So MZOR, we can see that Holly on risk off mode booked a zero, booked a flat on that trade. And we can see, why did she get out? Well, she was up in it a little bit, but by the time she closed it out, flatted. And I think we've all been in that seat before, right? We go to hit market buy, we think we're going to get 30 cents, we end up getting 24 cents, right?
Mm-hmm.
6 cents because of, lag and slippage, whatever. So same thing kind of happened here, which is why it says profit save. There was profit, but if you don't take it quick enough, profit can be zero, which is better than a loser, I guess. But more importantly, we see that risk on is now showing 50 cents. So what I really liked about how Holly handled this trade is the trade wasn't working. So not only does she have reduced risk, or excuse me, timed exits, uh, uh, stop losses, and time holds and profit targets, but she also has the ability to get out on profit save and reduce risk. So she made the call to get out early and flatted the trade, and then look what happened immediately after. Whoosh, stop out. Would have stopped her out. Now, of course, this just happens to coincide with the downdraft in the market, right? But what we always like to point out is that this statistical probability that Holly's bringing, it's good for the day. Sometimes the timing is off and we do get stopped out, just like any system. But when we see Holly get stopped out, or we see Holly in the red on any position, it's always a pretty good idea to go up here and do this. All right, we're way below the signal line. Well, sometimes the second pass gets it done. Sometimes the third or fourth pass. But on this one, as soon as we took this little excursion to the lower extremes, we come up here and set a price, or excuse me, a price alert. So by right clicking and saying, hey, next time it comes back up there, we want to be told about it, right? And of course, it's going to auto execute because it's already over. But when that thing passes through the second time, you could have gotten an alert for it. And of course, that was when the market had turned back up. And of course, this time, boom, just off to the races. So sometimes when Holly calls something out, it'll hug the line a little bit. It'll pass back and forth through it many times. Other times, depending on market conditions, we can have action like this, but it's always a good idea to set your price alert for the next time it comes back up there, because you can see from this one, it did catch and go. And there's one more thing to point out about MZOR. And Steve and I already scanned all of these symbols before the webinar, or as they were coming out in real time. And what we've been getting everybody in the habit of doing is, yeah, Holly's going to bring you these statistically weighted plays that are geared for the intraday. But guess what? Some of these might have long-term merits as well. So basically, not only is she bringing you this statistical probability for the intraday signals, she's also generating a list for you to check out and create a list of things that you might want to keep an eye on for tomorrow. And MZOR is one of the only ones that you probably want to set a price alert because of what's happening on the daily here. So we can see I've got my chart compressed all the way to the max. There's nothing lurking way back here. And we take a peek at what MZOR is doing lately. Now we got above this little area right here today, closed right at it. But these are the key levels that you want to pay attention to. So if we take the high of this, and of course it's not giving me my high and lows. Let's see here. Remove my crosshair. Okay. Wrong one, Jamie. Okay, so we can see the high of that candle from October 31st, 65.97. So I'm going to come up here. I'm going to say 65.98 because when that level is broken, if things look good, and this area right here gets busted, well then there's nothing but blue sky. MZOR will be heading into all-time highs. So 65.98, if it rises to long, Holly play, let's make some notes. All-time highs, watch for volume, which is pretty much what you need to do on most every play. So now we've got a working price alert to monitor moving forward. And pickings were a little bit slim. A lot of the times we'll find 2 or 3 that we add to our list to keep tabs on moving forward. But, same old song and dance, not as many good trades today, only one good long-term play to keep our eyes on for tomorrow, which is MZOR. So for all of you premium subscribers, set that price alert for MZOR and we'll see what happens.
I would just like to reiterate for the test drivers and the premium users, but mostly the newer traders, how invaluable that price alert tool is. I always tell people in the one-on-one sessions, the newer traders that is, try and force yourself to set 5 or 6 of those price alerts a day, and then let them start triggering. And then you can go back and you've got this data set you can look at to see, oh, this pullback alert didn't work very well. And the short did not work very well, but look at these 2 long breakouts that I bought focusing on a short squeeze at a new 52-week high. Those are working pretty well. So my point is the price alerts are a wonderful real-time feedback mechanism for what's working and what's not, and for newer traders to just take advantage of being able to set those price alerts, letting them trigger, and then see where they end up at the end of the day or a couple days if you're a swing trader, and focus on the strategies and the setups that are actually delivering you profits, and try to avoid and learn from the ones that maybe are not.
Right. It's a great way to, in essence, paper trade, especially when you're getting used to something new, because this will track your price and you can see if your ideas worked, just like Steve said. Good stuff. And of course, we just judged the contest. Every test drive we have a trading contest. So people send in their price alerts, and the people that obey the rules and get the best results get themselves a membership. If my memory serves me correctly, Steve, I think we typically give away one of the annuals, don't we?
Yes, we give away an annual for the first prize. I just stumped on this question. Would you check the relative volume ratio and lifetime high breakout? I think what you're saying, Cataldo, is if the stock is going to make a new all-time high, do you want to see good relative volume? I'll tell you my rule of thumb. When stocks are breaking 52-week highs, if I have a scan that I'm setting up for that, I use a relative volume of 1. It doesn't have to be giant, but what I'm doing is I'm safeguarding against stocks creeping to new highs on just minute, shadow volume. If you're going to creep to new 52-week high or a new all-time high, I would like to see the stock price doing that on at least a normal relative volume filter, which would be 1 as a ratio, meaning the stock is doing at least the amount of shares that it always does for this time of day and on a run rate. In other words, it's not behind pace, it's not necessarily way ahead of pace, but at least it's on pace to do normal volume. And so that's how I would answer that question.
Yeah, and I would agree with you, Steve. And the nice thing about windows like the single stock window that you see right here is that anytime I pull any stock up, I can just glance down here and take a peek at the relative volume, along with some of my other key favorite metrics like 5-minute volume, relative volume. And, volume is not the holy grail, but it can sure make a difference in a pattern continuation trade, because the more volume you have coursing through at that most crucial time, it's like the river and the water and how fast it's flowing, right? If it's not flowing very strongly, well, then sellers can take control and smash it back down, or vice versa. If it's going down, buyers can do that. But man, if that water's flowing like rapid style, you know that if you jump in, whoosh, you're downstream, right? So it's the same thing here. We always like to see accelerated volume on a continuation move. That's not to say that stocks don't go up all the time on average or slightly above or below volume, but in the long term, your odds are going to be much better targeting those with the exceptionally high volume. You just have to be a little bit more patient.
All right, let me jump on that last question because this is a good one. Relative volume, once again, compares the volume to the time of day to determine if is it ahead of the pace or the run rate, or is it behind the pace or the run rate for what that particular symbol does every single day in our database. So again, a value of 1 means the stock is right on pace to do normal relative volume. Now the question is, Does the relative volume filter compare pre and post market volume? No, it does not, Daniel. The volume count, how many shares the stock has traded, that will count in pre and post market, but relative volume is bell to bell. It's a good question, so I wanted to address that.
Right, and I just pulled up here. I'm going to do this one more time from an alert window. Right-click, configure. This can be your best friend when you're a new user. The good old search tab. As soon as I type in REL, I get relative volume. And when you're playing around in this little search panel, obviously you can see everything if that's what you want to see, but we try to make it easy on you. And if you ever need the exact definition of an alert or filter, you just click here, you click on the help button. What that's going to do is take you to our website and give you the exact definition, any applicable formulas that might be in use. So that can be a great resource, help you get over that learning curve a lot quicker. You can pull any definition anytime you need it there.
You know, that's a tough question that Anthony asks. The question is, how many times must a stock hit that Momo scanner before you look at it or take a position? I think it's probably more a matter of what the chart looks like.
Exactly, exactly.
Yeah.
Right, because hey, it could hit the what we call the Momo scanner once, and you pull the chart up and you're like, oh goodness, this is beautiful, I'm in. Or you might see it come through 20 or 30 times.
A level that might be interesting, and you set a price alert,
And then you see the crucial level, and then you're like, okay, I'm going to use my price alert because I wanted to sit here and watch this stock all day and have everything else pass me by. So good question, but it really just depends on as Steve said, what is the chart telling us right now. All right. Just checking out some of these questions. We got some questions rolling in here.
I'll show how do I access the Momo scanner. That was probably going to have to be a cloud link. Yeah.
Well, I've got a couple of Momo scanners here. Now, they're geared towards the larger cap stocks, like this guy right here, Turbo Up Family No Resistance. You know, if you take a peek at a lot of the stocks that were coming through here today, well, you're going to notice that these are some of the ones that they were kind of doing the sneaky buying on, like, of course, Amgen, the old stalwart pharmaceutical. Nice little range break here, and then whoosh, straight up to highs. So, of course, the beautiful thing about trade ideas is that these are configurable. Now, I will say this before I drop this one into the chat area. This is the same strategy, but 3 different versions of it in here. And the main difference is the green ones are companies that are capitalized at 4 billion and higher on the market cap. The blue ones are going to be between 2 and 4 billion, and then the small stocks, what I consider any company capitalized under 2 billion, are going to come through in yellow. But you can come in here and modify these things to your liking. So I'll go ahead and drop this guy into the chat panel.
There you go, Daniel. He's going to drop his copy in there for you and others who want it.
All right. All right, so that guy has been dropped into the chat. And you'll just need to find the chat panel on your go-to webinar interface. You should see a little menu called the chat menu, and then you'll see the cloud link in there. So that brings up a good question. You're going to see this cloud link. The easiest way to take this cloud link and incorporate it into your layout is we're going to click on it. All right. When we click on it, it's going to take us to this web page, which is basically instructions on how to use a cloud link, but I'm about to show you right here. So we're going to take the URL that is up in the top. We're going to highlight it. We're going to right click. We're going to say copy. After we copy it, we're going to find our TI toolbar. And all we have to do at that point is go File, Load from Cloud. Now it's going to paste the link down here for you automatically. So all we have to do is hit Load, and then we'll see the window appear. So it will be in your cloud if you go File, Load from Cloud, or actually, I'm getting ahead of myself. Once you load that window, it's a good idea to do the following. Once it shows up, just give it a right click, come down here, save or share to cloud, then click Save. Then it will be in your cloud,
Always and forever.
always and forever, unless you come in here and delete it manually. So once you save it to your cloud, you can spawn it, mutate it, try different things with it, but that original version will always be in there. So that way you can play around, experiment, and not worry about, oh, I killed it, or oh, I messed it up. It'll always be in there in the same version, same format. All right.
All right.
So it looks like we're almost caught up. Let me take a peek at my cheat sheet here and make sure I didn't forget to go over something. I think that's it. And we've got
That's all
about
I
five
got.
minutes. We got about 5 minutes left. Maybe one more question to come in here. Mike, I see your comment here. And the funny thing is, this little stock was on a tear today too, CRISPR. Mike made the comment about gene splicing, and that's that's basically what CRSP does.
Did not know
And
that.
it was kicking some nice volume. But hey, let's backtrack to relative volume today, because this little stock, boy, the sleeper has awoken. I mean, look at this little stock. Hardly does any volume today, and it came to life today, as we can see from the chart. And it was rocking a relative volume of over 200
Jeez.
most of the day. And this is a classic example of why you don't really want to overfilter, because sometimes these stocks that
Will come
are
alive.
sleepy, they come alive, and then you don't miss out on them, right? This little guy usually only trades, what, 70 to 50,000 shares a day, and it kicked out 3.2 million.
All right, here's a good question to answer on, an easy one from Daniel, and then we'll be done. The count filter. We looked it up in the help menu and didn't quite get an understanding through the documentation. So how would you explain the count filter?
No problem. So I just took one of my other alert windows here. We're going to go in here, which was configure, by the way. Just right-click configure. So here's the alert that I'm using, and here are my 5 filters, right? So I've got 5 filters with 1 alert, a new high attached. This is just, we could refer to this collection of things as the event, okay? Whenever a stock in the market exhibits this event, please, window, tell me which symbol is exhibiting the event. So this is just, since I don't have any count filter installed currently, as soon as this event unfolds for the very first time, boom, this window is going to tell me about it. Now, if I go to the count filter, there we have it. So if I install it now, if I did this, and this is applicable depending on the type of thing that you're looking for here. So let's say I don't want to just be told on the first event. I want to be told after it does this, after that event is exhibited or displayed 10 times, then tell me about it. So with a setting like this event would have to trigger 10 times before I was told about it. Or it could be 10 times or higher. So if I only wanted it after 10 or 11 times, I'd have to bookend it like so, all right? That's one way to use it. So this event would have to repeat 10 times, and then I'd hear about it for the first time. Sometimes people don't want to hear about an event after the first or second time. So if that's what you want to do, you can cap it. You can go, after this event happens 2 times, I don't want to know about it anymore. So we can use the min to go, hey, has to happen 20 or 30 times, or the max to say, after 4 times, I don't want to see that symbol anymore. So hopefully that makes sense, and that is the count filter.
All right, top of the hour. Good job.
All right, well, thanks everybody for popping in. Scott, if you're ready, we're ready to hear about what's going on, with the price increases and any applicable discount codes that everybody might be able to take advantage of, and
Yeah,
all that good stuff.
sounds good. There's a bunch of stuff coming up next month. So before we get into any of that, though, if you are on Interactive Brokerage, if you're an Interactive Brokerage client, you might want to consider trying out the Brokerage Plus integration. It's in our beta. It's also now in our regular version, and we're not charging for it yet, but you do need to be using Premium Trade Ideas. If you have any questions about it, just email info@trade-ideas.com for help setting that up. We also have some videos we can send you. It's really neat, and we want you to test it out. If you're an Interactive Brokerage client, that's why we're still giving away access. Do try it out. It's free for you to use. Our podcast, we just put a new episode up last week. It's the second episode this year. We're just getting started. They're usually weekly. We took a little break over December for the holidays and then also for New Year's, but it's back on. It's season 2 of the podcast. Make sure you're subscribing. Go to any of the applications used to listen to podcasts and search for Trade Ideas Podcast. Hit subscribe. That's that easy. Make sure you're subscribing. We'll have a new one out this Friday. There's a price increase coming in February. I'll explain it kind of quickly. In mid-February, on February 15th, we're rolling over to the new pricing. If you're already a subscriber, you don't have to worry about anything. Your prices stay exactly the same as your existing subscriptions go on, as long as it's an active subscription. You continue to renew at the 2017 rates, or if you have a previous rate, at that rate. But the new rates, the rates for 2018, are approximately 20% higher across the board. So get ready for that. If you sign up before that price change happens, like I mentioned, you keep the existing rate. So if you sign up anytime before February 15th and get in, for example, at the premium subscription of $1,888, then that's what you pay on the renewals, rather than the higher rate of, it's $22.69. And you can take advantage of our sales in advance of that, because we currently have a pretty good sale going on right now at the end of the test drive. January drivers, the code. You don't have to have been in the test drive to use this code, so anyone can use it. But it expires after midnight on January 31st, finish out the month. If that text on the left of it is wrong, it should be 22. I had that wrong, but the banner itself is right. So use that code before end of midnight on Wednesday, and you can lock in your 2017 rates, and then you don't have to worry about the price increase. We still have another code, but it's less. It's 15%. That's probably where that text came from, and it's new goals, and that's still good through the end of the month. But the end of the month is also the end of the sale for the test drive, so you should
Scott,
take
if you
advantage
get
of
it
the test
fixed,
drive
feel
sale.
free to jump back on.
Best price going right now. So use the code January Driver and save. If you have questions, email us info@tradeideas.com and let us know what your questions are. You can also reach out to Jamie or Steve directly, their emails.
That works.
And thanks everyone who participated in the test drive. If you're still in it, that code's going to be good through end of midnight on Wednesday. So take advantage of that. And if you have any questions about anything, including the price increase, just shoot us an email, info@tradeideas. Thanks.
Sounds good, everybody. Thank you, Scott. Steve, as always, thank you for your technical expertise.
All right. You got it. See you
Always
next
good
time.
stuff. And we'll see everybody tomorrow for the trade of the week.
That's right. Tune in for the trade of the week.
Bye-bye.
See you later. Bye.
Bye-bye.
Bye-bye.